All right, welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream. We got some great non-news from the Fed. I think the market was very concerned that the Federal Reserve was going to raise interest rates. They decided not to. They're going to speed up the rate at which they stop buying assets, which that was kind of expected. But the fact that they aren't raising rates, at least this time around, was a great sign for the market. That really propelled everything forward. We'll get to that in a little bit. But right now we're back to a risk-on environment. A lot of semiconductors are setting up and breaking out. Those are the names that we want to be focusing on. So in this live stream, we'll go over just kind of a general look at the market. Where are the indexes at? What are some stocks that are setting up? What are stocks on my watch list going into the second half of the week? And then after that, we'll break down any stocks that you guys want to see. So if you enjoy the live stream, please leave a like and subscribe to the channel. We're so close to 6,000 subs. That's the goal for the end of 2021. So help me get there if you enjoy the live stream. We'll start off taking a look at NASDAQ QQQs. So one of the largest daily bars that I've seen maybe ever, but with the Fed news going into today, we were down about 1%, I think. Let's measure that. Yeah, down 1.1% off of yesterday's close, under the 50-day moving average. Things looking bad, but everyone knew that it was really about what the Fed said. So down 1%. I mean, there were no setups going into today. So I wasn't doing anything before the meeting. And then once Jerome Powell came out, said we're not raising interest rates this time around. They plan to 2 or 3 times. I think it was 3 times in 2022. But that's not right now. So the market said, all right, let's get rallying. And QQQs went from -1 to close up right at the high of the day, up 2.2%, 2.3% on the day. And zooming out, I mean, you could see how wild this has gotten as of late. The ATR, average true range, measures those daily bars, got extremely wide here. Not a lot of setups, a lot of stocks rolling over, tech especially hurting. So you saw a strong pullback, let's see, 7.3% to the 50-day moving average. We gapped up last Tuesday, I want to say, and then we gapped down on this Tuesday, and now we shoot higher. So very tough trading environment through here. It would have been probably even better if you never traded through that area until we got today's official follow-through day. So that's where the NASDAQ or S&P 500 is up 1% or more on day 4 of a potential rally. And you count that, making the new daily lows, day 1, 2, 3, 4, 5, 6, 7, 8. So on day 8, we got our follow-through day. We're above all the key moving averages, and we moved up. Basically right to the volume shelf here. So really nice move on the NASDAQ. Let's go S&P 500. This was already holding up better than the NASDAQ because it was really the tech stocks that were getting hit the hardest. But had a very similar move down. I mean, not as strong, 5.3% instead of 7.3. Hit that 50-day moving average, pushed higher, and then now we had the second highest close, I think, of all time for SPY. Nice move back over the 20 and the 8-day. This wasn't down at the 50-day moving average like the NASDAQ was, but this was a really strong move, and it came on volume. E-Trade doesn't show the right volume on the day. Let's check IWO. This is the Russell 2000. This is what I really use to correlate with my own trading since this tracks growth stocks. You can see how much of a chop fest we've been in 2021. Very difficult trading environment as a breakout trader unless you're putting on all of your size kind of right on the turns here. Something that I've been working on and improving on. But I definitely did get chopped up from like April through August here. But today we took out the lows here. It looked like if the Fed said anything wrong, this was just going to roll down and completely break down off of this base. But we had a nice move up 2.2%. But still, this is down under the 8-day, 20, 50, 200-day, under all the key moving averages. So is it time to celebrate? Maybe. what I was doing today is slowly getting into a couple positions in the strongest group in the market right now, which is the semiconductors. We'll get to that in a second. But that's what I was doing. I'm not trying to go all in right now. I'm trying to get some lower risk entry points and then use progressive exposure. As those stocks are moving out, I can move my stops to even and take on new risk with the same amount of total initial capital risk, if that makes sense. All right, wanted to go to MarketSmith. Let me bring this down here. So GMIAB. Wanted to look at GMIAB. It's just a way that they show the NASDAQ versus the advanced decline line. And as you can see, when everything was kind of rolling over, the number of stocks rallying or the number of stocks participating in this last rally was not as much as before. And then when you got that sharp decline, you saw only a couple stocks were working: Apple, Microsoft. Roblox was working for a little bit, then rolled over. Matterport was working for a little bit, then rolled over. And this isn't showing today. Hopefully, we start to see some market breadth increase. But right now, it's still a potentially a lower probability trading environment. We'll see how tomorrow goes. Was this just a one-day rally and then we roll back down? We'll see. All right, let's cover a couple other stocks. Tesla. So a couple stocks that I use to kind of gauge the market is Tesla. That broke under the 50-day moving average yesterday, on Monday, closed at the low of the day. Pushed lower on Tuesday, but closed kind of basically even, still under the 50-day and under $1,000. So that told me risk off environment. And then today we rallied, closed at the high of the day, but still under the 50-day, still under 1,000. So not out of the woods by any means with Tesla. But NVIDIA, on the other hand, that broke under 300 on Monday. That was the area that I was watching because you see here on this gap down, it rallied and closed, I think it was 301.30. No, let's see, close. Why am I not seeing close? Closing range, 91%. Yeah, so 337 there. So it rallied just enough to close above 300. So when we closed under that, that was a real red flag, risk off environment. I was all cash at that point. We bounced at the 50-day yesterday, and that was kind of a sign, hey, this is in the number one strongest group in the market right now, semiconductors, number one out of 197. Let's keep an eye on this. And then today, higher highs, higher lows, closed at the high of the day, back above the 8-day, back above the 21 EMA, and on very high volume after bouncing at the 50-day moving average, and we closed over 300. So that's a great sign for at least semiconductors, and the fact that we saw Tesla bounce today and close at the high, that's a good sign as well. All right, let's get into a couple of stocks that I have on my watch list going into the second half of the week. A lot of them are going to be in this semiconductor group because I want to always have my money in the strongest stocks, in the strongest groups if I'm going to be in the market. But this first one that we're going to start off with is not semiconductor. It's AA. It's in mining, metals, and ores. 67th out of 197. It's a B group strength rating. Within that group of 37 stocks, it's the second strongest on relative strength, fifth strongest on a composite basis. Has a relative strength rating of 97. That's really high. We're always looking for stocks in the 90s or above. Unless it's an IPO, then it can trade a little bit differently there. Accumulation distribution, a little bit weaker on this, B minus. Taking a look at earnings, up 184, 443, over 1,000, then 275. Sales flipped from -2, +21, +32, +31. And after-tax profit margins, 2, 5, 10, and 13. So we're improving after-tax profit margins and improving sales here. Fund ownership on this also has been increasing. Let's see, September 2020, 409 to 602 this September. Let me jump over to the other. Come on. So this is one that I had been eyeing earlier on in the week. It bounced back over its 50-day moving average. Not a tech name, so if tech was continuing to get hit, but the market was staying afloat, I wanted to have some money in a different name. Now, I don't have a position in this right now, but we're watching this area for potential entry tomorrow. So yesterday, it actually was one of the few stocks that was up, closing near the high of the day, upper quarter, upper third, whatever you'd like to call it. And then today, we took out the low. Again, in the morning, everything was hectic. We knew it was going to come down to whatever the Fed said. And then we pushed higher, closed basically at the high of the day, and we have this nice kind of 3-day pivot to work with. Now, that is a little bit extended from the 8-day exponential moving average. Let's measure that, 4.1%. So if we open lower than take that out, I would be likely to take profits a little bit quicker on this move. If we could trade sideways for a couple days, allow that moving average to catch up, this range to tighten up, because we could see ATR is actually increasing for a lower risk entry point, that for a swing trade that we're trying not to get stopped out on the typical volatility at this time. We want ATR to actually decline. So the tighter these daily bars are, the tighter stop losses we can use. And then if you use a 3% or a 2% stop loss, you could take that loss a couple times before it actually starts impacting your account. The fact that these daily bars are so wide leads to a higher probability of getting stopped out with the normal volatility. So that's why I'm a little hesitant to buy just with a break over today's high, 51.08 or so. Just because we're extended, the daily bars are high, chances are we do check back a little bit, probably 2%, that would get you stopped out. So ideally, this trades sideways for a little bit, tightens up a little bit more, and then breaks out maybe Friday, Monday next week. That's AA. Next, we have AMBA. This is one of the stocks that broke out on earnings, but in a very weak market. So you saw it tried to push higher, but closed basically at the low of the day, backfilled a little bit, and then when the market gapped up, closed, it had its highest close ever, and then slipped down with the rest of the market. And then today, again, semiconductor, strong group, pushing higher, back above all the key moving averages, closing at the high of the day. 99 relative strength. I've talked about the stock many times before, but it's definitely one that I'm going to be watching tomorrow. If we open lower at all, try to manage my risk against the low of the day. I want to get my money in a name like this. I already have a couple positions with ON and MRVL, but the more money I can get in semiconductors right now, strongest group in the market, I really want to focus on that group. So A+ group strength rating, obviously, number one group. Has a composite rating of 99, a relative strength rating of 99, was really bucking the market downtrend in the last 4 weeks or so. Taking a look at earnings, we went from 0 to 475, 483, 533. So we have acceleration on earnings. Sales up 9, 28, 58, 64, acceleration of sales. And then after-tax profit margins 8, 13, 17, and 24. So you have acceleration on all three of those. And that's a code 33 if you read Mark Minervini's books. So that's a great sign, along with a strong group strength, strong relative strength, strong composite rating. It's all lining up for this stock. We just got to find our entry point on that. Fund ownership, just to check the last box, yes, this is increasing. We want big money flowing into the stock. That's exactly what we're seeing here. Within the group, the strongest group right now, it's second strongest on relative strength, number one on composite rating. And let's just do this. I love this about MarketSmith. You could click this, view stocks in industry. We already see that it's the strongest group, so why not look for stocks in this group? So we can just take a look here. Let's filter by relative strength rating, bring this down a little bit. And then you can see all the stocks in that group with a relative strength closer to 99. So AOSL, same story. Pulled back to the, is this the 8-day? No, 21-day EMA, pushed higher, closed at the high of the day on heavy volume. This looks great. NVIDIA, we covered that already. SITM, bounced at the 50-day, a little bit lower. Still a relative strength rating of 99, but that chart's kind of all over the place. Probably focus on something else. MXL, I was actually going to talk about this a little bit later, but also another semiconductor, really tight, or not tightening up, but showing relative strength, moving against the downtrend in the market. Lower volume pullback day, higher volume up days, especially recently here. Definitely one to have on your watch list, MXL. AMBA was the one we were covering, and might as well get to MRVL. This stock I took a position in today as it broke over, where was it? It was a little bit after it broke the high of yesterday. I want to say like 87.15 or so. So not a perfect entry by any means, but not a full position either. If we open lower, I could start managing my risk against that area. But MRVL earnings up 71, 61, 62, 72. Sales up 11, 20, 48, 61. After-tax profit margins 25, 24, 26, 30%. A+ accumulation distribution, A+ group strength rating, 99 composite. I mean, it doesn't get any stronger than that. So with this being said, if you don't want to pick individual stocks, SOXL, this is a triple leveraged ETF following semiconductors. So triple leverage, there is triple the risk with that as well, because it's trying to track basically 3 times whatever the semiconductors do. So you can see today it was up 11%. This is what I should have done basically, is once we got that kind of follow through feel of in the market, I should have been putting money into this instead of individual names. But that's always hindsight. I put it on MRVL and ON. ON isn't in that same specific group. It's in electric semiconductor manufacturers. Still a strong group, 10th out of 197, so A+ group strength rating. It's one that I've been watching for a while. Not very tight of a chart, but also good relative strength, lower volume pullback days, heavier volume breakout days, A+ accumulation distribution, A+ group strength rating, 99 composite rating, 98 relative strength, earnings 17, 25, 425, 222, sales 316, 38, 32, after-tax profit margin increasing by double digits year over year. Within the group of 40 stocks, strongest on relative strength, third strongest on accumulation distribution, and number 1 on composite. Fund ownership on it also increasing. So let me go back over here. Why is it doing that? Come on, there we go. ON up after hours, that's nice to see. But you can see how this was pulling back to the 20-day. I have the 20-day on this chart, moving average, while the NASDAQ was back down to its 50-day. So one thing to look at when the market's really pulling back is what stocks are pulling back to a shorter term duration that are in an uptrend. So stocks pulling back to the 8-day or the 20-day while the NASDAQ's at the 50-day. What's pulling back on lighter volume? What's trying to push higher while the market's pushing lower? And ON checked a lot of those boxes, was in a strong group, wanted to get a position in this. Didn't take this trade. I need to check my notes where I got in, but it was about 1.7% up on the day when I got in. I'm up about 2% on the trade right now. Again, similar with MRVL, this is a name that I want to put more money in, but didn't want to put everything on basically at the end of the day today and then just have the market gap down or something pull back tomorrow and get stopped out of my entire portfolio. So we'll see how tomorrow goes. If we can get some follow through, then we can look to move stops to even and take on more exposure. All right, let's go back to MarketSmith. AMD, another stock in that strong group. Look at this, 8% up, closing at the high of the day, back above all the key moving averages. Never closed under the 50-day moving average. Not much more to say there. CIEN, fourth strongest group out of 197 in telecom. This is a name that gapped up on earnings and has completely been fighting the downtrend in the market. So this is screaming relative strength to me. A+ group strength rating, A- accumulation distribution, 97 composite rating, 95 relative strength rating. Whenever you have 290s or above in composite rating and relative strength rating, that's a stock that I want to keep on a watch list. Didn't really have strong earnings per share up until this most recent quarter, which is why it popped, up 42%, sales up 26% year over year, after-tax profit margin improved by 13%. Fund ownership on this was actually declining through September. Chances are with this type of volume on the earnings pop, funds are taking positions on this now. So once we get December's numbers, chances are that's going to be higher, but that is obviously speculation right now. Within that strong group of 9 stocks, it's third strongest on relative strength and second strongest on composite. So I'm going to do the same thing, hit the stocks in industry and try to see what are the stocks that are stronger than it. Can we find, oh man, this CLFD. That would have been a really, really nice trade. I'm going to write that down actually, CLFD. Don't know why I didn't have that on a watch list. And I do this all the time. Like I'll be looking at a stock, be like, oh, this is a great setup. And then I click this view stocks and industry and then go through a couple of names and it's like, oh, there's even better setups out here. So that's one of the more useful tools on MarketSmith. Man, this would have been nice. Let's look at it in another view, CLFD. And while I'm talking about this, I see a couple of stocks going into the chat. That's awesome. We will get to any stocks that you guys want to see throughout the hour today. CLFD. Let's go back. Okay, that's probably why it didn't make it through the filter. So the average daily volume on this, 127,000. What I was doing with my volume filter this week, because all of the stocks that were holding up better than average, better than the market, usually were more liquid. So the more liquid names, I didn't want to get caught in a thinly traded name, especially while the market's volatile. So I put my my filter on, I think it was like 400,000 or 500,000 shares traded a day. So that makes sense why I didn't see this one. And because of that, I'm not mad that I missed something like this. Smaller, thinner names are going to pop, but if the market does kind of maybe digest this move and then start trending higher, then I'll bring that filter back down and kind of allow myself to trade those thinner names. But still, for now, I'm going to keep that that filter into the higher the more liquid names, if that makes sense. More liquid names, more institutional ownership, more likely to be supported at key areas is the thought process behind that. So that was CLFD, OCC, 25,000 shares traded a day. Yeah, okay, so that makes sense. Not mad about that. CIEN, let's check fund ownership on this one. Oh yeah, we covered that. So CIEN. Gapped up about 15%, followed through. Had a little bit of a pullback. Is this not showing? Oh, it's showing after hours. I hate that it does that. Yeah, I'm trying to think. If we open lower and then we can manage risk against the low of the day here, it's still so extended from the 8-day exponential moving average. So any trade that I would put on in here, I'm trying to flip it much quicker than a very sound base like AA was. I mean, even that is a little bit extended from the ideal buy point, but what's another good one? Like Ford before. Yeah, I see, Chad, you brought up Ford. I had this on, I'm putting this on my watch list as well. So this was a really solid setup going into, I think that was Thursday, Friday, Monday, Tuesday. Friday, Monday, Tuesday, Wednesday. Okay, so on Friday it broke out. I didn't take this trade on Friday. I wasn't taking any trades on Friday. Really nice look, and then it reversed lower, got shaken out with the market, and now we're right back in that area. I would be looking to buy this if it broke out over today's high, 2033. Stop at the low is 4%. It's a little bit wider. Maybe you could get a stop tighter than that. But let's check MarketSmith. So Ford, auto manufacturers, 13th strongest group out of 197. That's an A+ group strength rating, B accumulation distribution, 85 composite, 98 relative strength. That's awesome. The relative strength in here while the market was rolling over was just phenomenal. Not many people were talking about Ford. Like I did not see it out there on Twitter. now that we broke out, kind of pulled back with the market, we're tightening up again. We can manage risk against the low of the day, also around that 21 EMA, 4% risk there. Second strongest stock in that group of 29. Let's just check. Is the strongest Lucid? I disagree. I don't think Lucid is as strong as Ford right now. But let's TTM. That's all over the place. Tesla, Race. That's thinner. Rivian has earnings tomorrow after hours. Okay, yeah. Ford is the name that I would focus on in this group right now. Check fund ownership. Dipped a little bit in September. We'll see how that works out in December's numbers. All right, that was Ford. I had a couple names that I just wrote down really quick as I was going through charts today that I wanted to look at. Computer software, 125 out of 197. This is ENFN, IPO'd this year. When did it IPO? What was the date? October 21st. It's getting nice and tight right around $20. We'll check that in a second. Composite rating 43, lower end. Not profitable yet with earnings. Sales up 44, 37, 37, 47. No fund ownership to go with. Let's check this. Yeah, we'll come back to that later. Okay. Ford, Marvel on. I think I just had one more. EXTR, this is in computer networking, 8th strongest group out of 197. So that's A+ group strength rating, B+ accumulation distribution, 96 composite rating, 97 relative strength rating, 290s, awesome to see. Earnings per share up 18, 278, 533, 133. Sales went from -9 to +21, +29, +14. After-tax profit margin up 7, 8, 9, and 10. Fund ownership increasing. That's a good sign. In this 8th strongest group, 15 stocks in that group. 2nd strongest on relative strength, accumulation distribution, and composite rating. Let's just quick check. What else is, oh, ANET. I totally missed this trade. And this is one that I'm kicking myself because you see average daily volume, 2.2 million. That would have been fine. It was on a general watch list of mine, but I was just trying to get positions in semiconductor names today. So computer networking, even though it was a really strong group, even though this was showing relative strength, even though this had the perfect entry, like this was a complete miss on my end. Not buying this as it came through, making new highs here. If I could give back like MRVL for ANET, I probably would do that at this point, but I'm not mad about that purchase. I just wish I would have also added to this one, ANET. If this can pull back into this area, I would definitely be interested in owning this because let's see, strongest on relative strength, strongest on composite, 97, A+ group strength, A- accumulation distribution, 98 relative strength, earnings, sales, after-tax profit margins, all good on that. Fund ownership increasing, gapped up, pulled back. We did lose the 21 EMA, but never tested the 50, so relative strength on that shorter duration moving average. Got going, just a small pullback. Yeah, this was a total miss by me. I'm gonna be transparent with that one. But yeah, looking at this, it hurts because it was on my watch list or on like a general watch list. I should have had alerts set. This should have been a stock that I jumped all over today, and I didn't. So that's transparency. I'm not gonna get every stock right, that's for sure. Got to do better though. ANET. If we can pull back, see a way to manage risk in here. Really strong name. But what was the name that I was trying to? EXTR, as I got distracted. Yeah, see, this doesn't look nearly as good as ANET. What was I doing? Still strong group. Let's check some other stocks in that group. JNPR. $2 million shares traded today. That's extended from the 8-day already, 3%. Let's see. LTRX, that looks bad. This is a nice long base. Not as strong earnings recently though. Fund ownership declining. I mean, this could still work if ANET doesn't come back, but I'd rather focus on the strongest name in the group. Oh, also average daily volume 120,000. That's a little too thin right now. 340, still thin. That chart's not great. Cisco, that looks nice. Solid breakout there. Okay, so EXTR. Let's jump into this chart to see if we can find an entry. Up a little bit after hours, ignore that. Let's go to a 10-day chart. See, because this was such a news-driven event that made this pop off, it never really coiled up and then went. It was just bottomed and then going. So that I think over the next couple of days, as we digest that move, after some ranges tighten up, I think we're gonna be able to find a couple good entry points in these names. That's why I didn't go 100% all in today. I want to give some time for these setups to tighten up a little bit more. But EXTR, I don't love this bar, and that's why AN. Try not to beat myself up, but yeah, ANET, that's the one to focus on in this group, especially if it comes in a little bit. All right, enough talking about that. Let's see, AA, AMBA, AMD. Swim or pool? These both in the same? No. Swim, this is one that I had on the breakout watch list. We had a nice pop on earnings, then follow through. This is a chart that's actually tightening up already. Not in the tech groups, building construction, which construction has been strong, 14th out of 197. A+ group strength rating, A- accumulation distribution. Fund ownership dipped, but again, here is September, right around here. So since then, we've had heavy volume breakouts, 1, 2, right through there. So chances are fund ownership is going to increase. Out of 41 stocks, relative strength, because it just IPO'd this year, has a relative strength rating of 80, but this is a change in character. We're building out the right side of the IPO base here. So want to put this on the radar. SWIM. 500,000 basically on the dot. That's how it got through my scan. Let's see. Measure from the low. So 111 move up. Since then we've pulled back 12%. ATR is still elevated. You can see the daily bars are still wide. There's volatility in the market. That makes sense why the daily bars are wide. But if that can tighten up a little bit more, allow that 20-day moving average to come up, and then just curl off that. It would be ideal if we open lower and just put in a couple tightening days before taking out today's high. 25.58 as a potential entry point for SWIM. All right, we're gonna go to stocks that you guys wanna see. NUE. Yeah, this was maybe one of 10 setups that actually looked good going into yesterday, and it did break out. Didn't close very high in the range. Let's see, closing range 59% yesterday, but still got going on a tough day. But I don't know if this was news driven or something, but down 8.6% today on heavy volume, closing under the 50-day moving average. And the fact that semiconductors are working, we have stronger groups to focus on. After a move like this, high volume close under the 50-day, 44% closing range, so not even in the upper half under the 50-day. It's not something I want to focus on right now because with this type of volatility, chances are you're going to get stopped out if you're trying to trade off the low here. And I just think there's better opportunities in the market right now. It's got a B+ group strength rating, which isn't terrible. Accumulation distribution D+ though. You can see heavier volume days have been on down days. We had a couple up days through here, but yeah. I didn't see if there was any news. I mean, earnings, great. Sales, great. After-tax profit margin, great. But breaking that 50-day, closing under the 50-day on heavier volume while everything else in the market was ripping higher, that's a bad sign to me. And there are better opportunities out there. And that's what sucks. Like, this was a great setup any other time, and it got out and then just reversed lower, and now it definitely needs some work. But that's NUE. MP, similar story. I think, was this an earning? No. This was what was the news on this? Yeah, partnership with GM. Okay. Even when they announced that partnership with GM, it closed 8% in the daily range. That's just how poor the market had been recently. So great news, pushed higher, went over all of these highs, and then reversed and closed basically at the low of the day. Had an inside candle the next day, and then the market pressure just pushed it lower and lower. And I mean, today up 2%, closed at the high of the day, right? Closing range 98%, but still under the 8-day, under the 21 EMA. And the fact that we're not over those, while like stocks like AMD back over all those, NVIDIA, I mean, any of those semiconductors, like there's one obvious group of strong stocks right now, and that's really what I want to be focusing on. Is MP the worst stock in the market? No, absolutely not. It never tested the 50-day moving average. That was a sign of relative strength. But you can see here, I'm going to do this kind of megaphone pattern. You're not getting low risk entry points in this type of pattern. You're seeing volatility increase. If you're using stops at like 3%, even 5%, chances are you're going to get stopped out with that normal volatility in this range. It could be a stock to focus on, but I want to see it get back over the 21, the 8-day EMA, and then tighten up before I try and trade it. But I mean, through here, it was something that I had on my watch list on the day that the news came out, but it already gapped up. I wasn't chasing it, especially in the market that we were in. So that's my take right now on it. It's still above the 50-day. It's found support right at, here, let me change this back to TrackPen. Low of the day, 39.82, so right around 40, found some support there. Yeah, it's not the worst stock by any means. I don't think you're going to find a low risk entry point on it though. MP. Check Riot. Yeah. So first things under the 200-day that I'm seeing, under the 200-day, under the 50-day. So those two things are part of my criteria. If I'm buying a stock has to be above the 50-day, have to be above the 200-day moving average, because I'm trying to get my money into the market leading stocks. And if the stock's a market leader, it's going to be above its 50. It's going to be above the 200-day moving average. And right now it's not. It pulled back, had a little bounce, and then just flushed lower. A lot of the like Coinbase, same story, SI, Mara, those are all stocks that I traded earlier on, kind of in, was it October that they were all moving? October, November. But right now, not going to be my focus being under all those moving averages when there's better setups in the market. Let's see, B+ group strength rating, that's not terrible, but accumulation distribution, C, earnings, were good, plus 164, 175, 414, but then negative this quarter. Sales 341, 871, over 1,000, all good things there. After-tax profit margin. It's not to say that this stock can't be a market leader, but if it's going to be, it's going to get back above the 50 and the 200-day moving average. And the problem with anything trading under all of this supply is when you get up to these ranges, say you were buying off the low here, you bought at 20, you're up almost 100% as it rallies up here. So you're probably taking profits, and then anyone who got stuck trying to buying the dip here as it bounced can get out for break even now. So then you see selling. And then you see a rally. These people are up 80%. And we're back into this zone. And then you see a pullback. So the larger you see these pullbacks and the more supply, the more chop you see above the area that you're trading at right now, the more resistance that you're going to see on the way up. So that's why I'm trying to trade stocks with relative strengths 99 that are near their all-time highs or making all-time highs. Anything that has less resistance, less supply above, you're going to be increasing your probability of the trade of that actually working out, especially if you're trying to hold on for a longer-term trade. Chances are this is going to need time to really, really base out, get above those moving averages, continue to chop a little bit before it actually becomes like a market leader. So that's my take on RIOT. See VLCN. Auto manufacturers, you said this is electric motorcycles. Okay. A+ group strength rating, A accumulation distribution, IPO'd. What day was this? October 6th. Composite rating 45. No earnings, no sales, no after-tax profit margins to talk about. Relative strength 33, but it is an IPO. Accumulation distribution, that's an A. That's good to see. No fund ownership to work with just yet. Came out in October. We only have through September numbers right now. VLCN. So I've never heard of this company before, and the fact that we don't have much data to work with, I would have to do some more research in this before I would trade it myself. Yeah, we don't have the 50-day yet. Let me switch that. We don't have the 50-day to work with, but we're below the 20, below the 8. We did reverse, never took out the low, or no, we did took out the low on the 13th and 14th. Yeah, with this, I would want to see it actually put in an IPO base at least 8 weeks or so, tighten up, and then try to trade this. But I don't know anything about the company. Right now, it's just not a favorable setup, being under all these moving averages, and you do see some distribution up here. We'll see. I do notice that a lot of the higher volume days are on up days. A lot of the pullbacks came on very light volume. What's the average volume on this? 600,000? What's the average volume lately? Pretty thin name. Yeah, thinner name, no fundamentals to really work off of. We don't have fund ownership info yet. So I'm not trying to, I'm not going to be trading this just because I don't know anything about this company. Need to do some more research on that. So sorry, Robbie. Wish I had more for you on that one. Let's see. Zim. Man, I always think ZIM is going to be a true market leader. And I mean, at times, look at this trend, nice. When it IPO'd, super strong. But $60, right around there, has always been some resistance. What was the high? ZIM. I don't think this is showing. Why is MarketSmith showing the high as 58.31, while E-Trade shows the high as 61.50. Does that have to do with a special dividend? When did that come out? It's not going to show. Anyway, well, the chart looks the same. I think MarketSmith took out the special dividend and E-Trade didn't, maybe. I could be wrong about that. But looking at it, just on this chart, trading at 49. I don't know. But we saw when it was trading around $60, right through here, previous resistance, that's when it failed, rallied up to that, failed at 59.70, rallied up to it, failed at 60.09, rallied basically exactly at 60, failed, pushed over 61.50, and then failed on that day. And then you see heavy distribution down, cutting through the 50-day moving average, not even finding any bounce there on heavier volume. And now today we're up 8% under the 50-day moving average. As a swing trader, I'm not interested in it unless it gets back over the 50-day. Even with that, this chart just needs some work at this point. Really wide ranges, ATR increasing instead of decreasing. If you look at just fundamentals, earnings per share up over 1,000, over 1,000, over 1,000, 794. Sales up 64, 112, 200, 210. After-tax profit margin 27, 34, 37, 47. Fund ownership increasing. Number one stock in the group on relative strength. Number two on composite. A lot of things lining up fundamentally, but you don't get paid on the fundamentals. You get paid on the price of the stock. And right now, see, this is showing it over the 50-day moving average. I'm not sure which one is right. I'm going to need to look into this more. But either way, the type of daily bars we're seeing here, heavy distribution, heavier volume, and today's rally was less volume than yesterday. That's concerning to me as well. So not one that I'm looking to trade while there are so many other opportunities in the market right now. But I feel like I would trade it again. This has been one of the stocks that I've traded a lot in 2021, but it definitely needs some time to set up. Let's see. Low share count on VLCN. Okay. Let's check AMD's chart. So AMD moved up 8%. What I would love is if we opened lower and then took out the high of the day, that would show some confirmation that this wasn't just a one-day rally or a move with the Fed news. But AMD, look at this. The low of the day bounced right on the 50-day moving average. Yesterday, it basically tried to push down, gap down, rally back above that 50-day, sign of relative strength. And today, just a massive move. But again, I'm going to go to the 10-day chart, and you're just going to see there's no area where it really digests the move where we can manage risk against because it was such a news-driven event. Semiconductors were showing relative strength the entire time. So when that market pressure gets relieved, that group's just going to take off. But how do we find an entry point on this? Ideally, we open lower, we pull back, and then we take out today's high, 146.70. We have 1, 2, 3 touches of that area. We have previous support. Now it's resistance on the way down, or once you close below. So if we could tighten up for a couple days underneath, that would be ideal. Or if we just open lower, take out the high. That's what I'm looking at for AMD. If you can't find just a perfect entry point, SOXL, you can manage some risk through that. And that's going to give you exposure to all the semiconductor groups. NVIDIA, let's check that. I think the story is going to be the same. Let me go to the 10-day. Yeah, same thing. Just because it was news-driven event, up 11% off the low there. Really strong move. yeah, no super clean entry point. You see ATR is just climbing. It's not usually a good sign. Let's see, target. Target is under the 50-day moving average, bounced at the 200-day, so buyer stepping in there. But as a swing trader, under the 50 days, just a no buy zone for me. You can see it pushed underneath, bounced, and then rolled. We're under a lot of the overhead volume, so a lot of resistance up top. Target's not really a stock that I feel like many people swing trade though. So maybe the volume shelf of resistance up top might not have the same effect as if you were a Roblox or a swing trading kind of stock. Man. Target's just so strong. Let me check some fundamentals on Target. A group strength rating, sales 21, 23, 10, 13, after tax profit margins 5, 7, 7, 6. Yeah, I mean, I just don't want to be buying anything under the 50-day. If you're a buy and hold investor, buying along the 200-day moving average is a very popular strategy. But I'm not a buy and hold investor, so I mean, I don't want to say what you should do as a long-term investor because that's not what I do at all. So we'll see. If it gets over the 50-day, then we start putting it on a swing trading watch list. Roblox. Man, what was the news on this? Roblox drop big today as a stock buy. Engagement metrics. So not even an earnings call or anything, just engagement metrics. Slowing growth in daily active users and time spent on the platform. Yeah, another cool thing about MarketSmith is any news, you just click on here and you can find it out. But I thought this was going to be a market leader. I traded this on this day and then got stopped out the next day as it came back down. The market just wasn't ready to actually move higher. So got stopped out at even on like the rest. I sold some in the strength, got stopped out on even on the rest. And since then, this has really kind of fallen apart. Now we're under 100. We're at the 50-day moving average. Nothing about this excites me right now. This is going to have to set up. It's going to take a while. I mean, maybe it just rips higher, gets back to 120, but even with that, we're trying to look for low risk entries, something where we could put 3%, 5% stop losses on. With a move like this, volatility here, let's check ATR. It's going to be through the roof. Roblox. Yeah, look at how it's up after hours, great. But yeah, not something I'm interested in at this point. Definitely needs to kind of tighten up and base out here. Let's see what else we got. Quick question, do you think an inside day tomorrow would be better since today was such a strong move to let the gains digest? I would love that, especially in these semiconductor names that I'm trying to get as much money in as possible. The more we see average true range, ATR, tighten up, which would happen with an inside day or multiple inside days or a week of just kind of trading sideways, tightening up, the better risk reward we can get with our stop placement. We can put it, instead of an intraday low, we can put it under a multiple days low. And that increases the probability that the trade's not going to stop you out until the actual trend starts to break to the wrong side. But if we're seeing all this volatility in the market, then you're looking at like a 5-minute chart. Where can I put my stop so it's like a 2% or 3% risk within that one day? Like in the shorter time frame you go, the less credible that the less credibility that the data has, basically. So when doing so, you're more likely to get stopped out. So I would love, like you said, Alan, I would love an inside day or a couple inside days, really digest the move, especially from the semiconductor group. And then we can have the rest of the Santa Claus rally. But if we just continue higher tomorrow, I'm about 45% long, and then I do have a short position on Penske right now. We cut the 50-day moving average on high volume, built out a ledge right on the 50-day, and then rolled down. Covered half of my position before the meeting today, and then I still have half left. So I'm already 45% invested long. This is like, I don't know, 6% short or so. So if we continue higher tomorrow, I'd still be happy. But if we get a couple inside days to tighten up some ranges on the leaders, I would be very, very happy. Came back up end today. What are you talking about? Thanks for the input. No problem. QCOM, same story. In that semiconductor group, absolutely a name to have on a watch list. A little bit more kind of volatile, but this one, 8-day EMA, that's what it was closing on, where NVIDIA was down to its 50-day. So better relative strength compared to that name. AMD, same thing, down to the 50-day, where QCOM, only back to the 8-day. It did pull back to the 21, but the most recent pullback is what I'm meaning. And now we get back up to the point where it's failed once, twice, 3 times before. So are we going to see this fail and come back into the range around the 8-day EMA? Maybe a good place to manage your risk against the low of the day. Or do we just rip higher and make a new high on this? Who knows? AZO, retail auto. Is this AutoZone? Yeah. I mean, look, that looks like basically the perfect chart. And it's just a non-tech stock, 7th strongest group in the market, nice uptrend, never pulled back to, I guess, the 50-day a little bit, but recently breakout on earnings, consolidate, pushed higher, close at the high of the day. Just not a very fast mover, but really strong and nice uptrend. Not as much volume, 164,000, so keep that in mind. All right, we got 1 minute left. Thank you guys so much for showing up to the live stream. If you enjoyed yourself, please leave a like and subscribe to the channel. We're trying to hit 6,000. We're so close. I think we're 30 subscribers away, about 30. So if you enjoy stock trading, I do this live stream on Tuesday. Well, typically Tuesday night. I pushed it because of the Fed meeting to Wednesday. And then I do a breakout watch list every Sunday morning. So make sure you follow me on Twitter. I'm Stock Trick Nick there, and on StockTwits, Stock Tricks with Nick. If you guys are interested in MarketSmith, there's a link below in the description that you guys can try it out. 3 weeks for $20. See if you like it. See if it improves your trading and your research. I know it has for me. And with that said, have a great rest of your week, and I'll see you guys on Sunday for the breakout watch list. Take care.